All right, so let's begin. Everybody's talking about the 50-year amortization. Now, here's my opinion about this 50-year amortization everybody's talking about it. And some people have good things to say, some people have not so much of good things to say, but I'm going to state my opinion. 50-year amortization. First off, this was proposed in America by Trump, saying that, hey, maybe we need to get the 30-year amortization changed to 50 years so that people can afford the home. That is his solution. Now, of course, at the end of the day, once you change the amortization, more people are going to be able to afford the same house, which means there's going to be competition, and the home prices at the end of the day will go up. That is a fact. Now, in states, things are a little bit different. So let's say that you're going for a mortgage. You can single handedly pick a rate and stick with it for 30 years or 50 years if they were to come up with that amortization. So that's a very long time to just hold on to one rate. People usually sell within that time, right? They need to move for whatever reason. So they'll eventually break it. But you can technically, if you don't move, stick with one rate for 30 years. There's no terms there. In Canada, however, the mortgage amortization periods are divided into terms, right? Usually, the most common one would be the 5-year term. You can get a 5-year variable, 5-year fixed. So it really depends on your risk tolerance and what works better for you. But if you were to get a 5-year term on a 50-year amortization, that's going to be 10 terms. So you're going to be renewing the mortgage 10 times during the lifespan of the mortgage, right? Now, I'm not a fan of 50-year mortgage, yes, because it's just too long. However, in 2008, prior to the changes that the government brought in regards to mortgage amortization, we used to have 40 years mortgage. Now, what I propose or what I would do is, hey, let this be a chance for first time buyers to get into the market. Maybe this can be something that's utilized for first time buyers. Young people who are buying, can't afford it, great. You make sure that investors are still accustomed to maybe 30 years, even less. If you wanted to go to maybe 25 years for investors, you can do that. But for first time buyers, I think this would be a great opportunity to bring back. And yes, over the period of time, you're going to end up paying a lot of interest over maybe if you were to choose the 30-year option, 100%, right? However, you have to realize that a lot of lenders have prepayment options, which means that let's say you're starting out, right? You're married, you have kids, and you're just starting out. You're in the prime age of buying a house. Now, there's not a lot of spare change to go around to make extra payments on your mortgage. You probably just started your career, which means the salary is not high enough. But eventually, after gaining experiences and after looking after your primal response, like your kids, right? You will have more money to spare to pay down the mortgage faster later on. So some of the prepayment options are you can do lump sum mortgage payments, you can do pretty much double up payments, you can do accelerated payments. So there's a lot of options from a lot of lenders. You'll have to look at the mortgage agreement or just call the lender themselves just to see what these agreements are in terms of prepayment, but you can always do that. And just because, hypothetically, let's say if you were to go with the longer amortization period, it doesn't mean that you're locked for that long, right? You can always break it. Yes, you can break it. Let's say you win the lottery or something. You could break it and pay the mortgage. There will be a fine, but who cares, right? At the end of the day, what matters is that you are not tied to this 50 years mortgage for life, okay? I think if the government proposes not 50, maybe a 40 years amortization period where first time buyers can get into the market, that would be great. Now, maybe there needs to be a stipulation on these 40 years amortization where refinancing should be restricted up to a certain LTV. I don't know what that is. I'm not a numbers guy, I'm not a mortgage guy, but I think if you can control those elements from people using the houses as their banks to take money out and they're just using them to buy and stay there, and if we can incentivize them for the behavior of, hey, first time buyer, here's your home, be happy, stay there, and if you wanted to prepay when you can later on in life because you have the means to now, then we should let them do it, and that would be a great thing. And on the other side, a lot of people are complaining about when the market is going up, that investors tend to get in and bid up everything over the first time buyers. We should even look at the other side of the equation where maybe we should make it a little bit more harder for investors to buy property. Maybe we should make it a little bit more harder to pull equity from their existing properties, right? So if we can do these things, then definitely I think it's a good idea. Yes, overall you'll pay more interest, but listen, if I don't have a home right now, and I understand the plea of some of my clients and what they're going through, and what it would be to have that extra amortization so that their payment can come down and they can finally get into the market. Like, I would feel the same thing. Like, I would do the same thing. I'd be like, yeah, like, give me the 40-year amortization, no problem, I just need a place to live. It would be, in fact, cheaper than renting in some places, right? Yes, the ownership of a house comes with all the maintenance and etc. and all the extra payments that you have to make. But at the end of the day, the payments that you will be making, let's say even for 20 years out of 40-year amortization, you will be paying that towards your house. So yes, I'm in favor of it. However, there should be some control. So let's see what happens, but it's just a speculation right now. Anywho, thank you for tuning in. We'll see you in the next video.